On PM Express tonight, banking sector shakeup. Problem solved? The banking sector shakeup has been going on for a while. And in fact, this regime of the central bank, the Bank of Ghana, has been at pains to indicate, and in the press conference that was done last Friday, stated that it appears that the reforms have come to an end. So tonight we'll be exploring what and how do we sustain and maintain the gains that has been made, if gains have been made after all, in the wake of all the reform that we've seen over the last 2 years. The road ahead is going to be tough. The shakeup is done, but how do you maintain and how do you restore public confidence in the banking sector? We'll be examining that. Let's look at some of the key dates, because the dates are important in the banking sector. January 1, 2019 was a key date. All banks operating in the country should have met the 400 million cedi new minimum capital requirement. However, we know that at the end of that process, at the end of that deadline, only 23 out of the 30 banks in Ghana had met the requirement. Even out of that, there were 16 that actually met the requirement. The rest had to be merged in various forms. So we'll break that down for you. We know that some of these banks, in fact, one of them in particular, GM Bank, belongs to Dr. Indu. They could not meet the new minimum requirement. And so they applied to the bank, central bank, so that they get downgraded. They've been issued with a savings and loans license. And so they're going to operate within that realm, moving from a bank to a savings and loans company. But I asked the question, will that solve their liquidity challenges? Because already GM Bank is in trouble. Will this solve their liquidity challenges? For those of you who've been calling us and telling us, I go to GM Bank, I want to withdraw cash, I'm unable to, my money's stuck there. Will this downgrade from a bank to savings and loans, will that solve the problem? We'll find out from the experts who know. Also, on deadline day, at the press conference, we got an announcement that the Bank of Ghana had revoked the licenses of these two banks, Heritage Bank, Premium Bank. And we'll tell you why shortly. We know that the Bank of Ghana approved a purchase and assumption agreement with Consolidated Bank. Remember that. This bank was created last year to take up some of the banks that went under, 5 of them to be very specific. That bank, CBG, is going to take over the assets we know of the 2 banks that had gone under in the wake of the new minimum requirement rules that had come into play. Premium Bank was found to be insolvent and had a capital adequacy ratio of minus 125%. This is serious. The Bank of Ghana established. Also, Heritage Bank, according to the BOG, obtained its license with, as we've heard over the last few days, questionable sources of capital, and a significant shareholder was not fit and proper. When you apply the fit and proper test to the owner, we understand that he simply doesn't meet that test. We also know that the board, they've been fighting back over the last few hours today. There's a statement out there today. Members of the board have described the withdrawal of their license today as a grave injustice and a terrible precedent. That's from the bank. Now, but the Bank of Ghana explained that the 120 million used to set up the bank appears to be linked to a case that is currently a subject of criminal investigations. Aspects of this are in court. You know that Mr. Agongo is a man at the heart of this and is in court battling Iyoko and others. The Heritage Bank problems, they don't go away. The Heritage Bank board describes the Bank of Ghana's explanations as either complete falsehood or inaccurate. And they've been fighting back all day, in fact. The governor, Dr. Adesing, however, said that the banking sector cleanup, as I indicated at the beginning, they are done with it. There's another controversial bit of this that we'll be interrogating tonight, which is the establishment of what they call the GATS, the Ghana, a trust, essentially, that has been set up, made up of private pension schemes that are going to put together money into some of these banks, 5 of them, particularly NIB and ADB, will get money from this private pension scheme. But who are these private pension schemes that are putting money into this? And will this really solve the problem? We'll be interrogating that. But as far as the Bank of Ghana is concerned, the shakeup is done. And it says that the effect of some of these changes that we've seen will be felt in the sector shortly. But the beauty about the banking sector is that if the effects are going to be felt, you will feel it. And so we'll be analyzing how this will play out in the coming days. But essential question, will the directives that we've seen and the changes that the Bank of Ghana has sought to implement over the last 2 years resolve the banking sector crisis that this regime came to meet? And if so, how will this be felt in real terms for you who save in these banks? But also, in the midst of doing all this, public confidence in the sector took a hit. How do you restore that? How do you restore that, and then hold on and maintain the gains going forward? We'll be interrogating all this with experts who understand this better than I do, and hopefully guide us through this very complex picture that is beginning to form. Stay with us on PM Express. On the show with me today are two individuals who really understand the issues that we'll be dealing with. And a lot of the issues that we'll be dealing with are pretty technical, but we'll try and break it down. And don't worry if you are as confused as I am about all that has happened in the last few days. We knew that going into the new year, the banking sector will be the biggest item that anybody will have to deal with because of the deadline for the new capital requirement. But at the heart of it all is the banking customer, the millions of market women, workers like myself who earn our daily living. In fact, our salaries are paid to the banks. A lot of these banks are holding our cash. And so when the state is taking actions, they're taking this fundamentally, primarily because of me, because of you, because of my little amount of money. And the guys I have in the studio have a lot of money in these banks, and so they themselves are affected as I am. And so it's good to have in the studio Sidney Casely Hayford, a financial analyst, a man who says it the way it is, but also provokes with his thoughts on some of these very critical national issues. Casey, thank you for your time here on PM Express. I'm grateful that you managed to join us.
You're welcome.
Nana Otuo Champon is a banking consultant, understands these like a palm of his. He holds the banking sector in the palm of his hands. Sometimes I say this, you say I shouldn't, but I listen to you all the time on these matters, and you seem to really understand it. And so I'm grateful that you join us here. You can send us your questions as well as we try and break this down. Today we heard from the Bank of Ghana, just trying to, smoothen the edges of some of the controversial issues and trying to break this thing down further. Casey, let me start with you on this. I assume that you have money in the bank.
It's a good assumption.
Yeah, good. So let me start from there. So as a customer, thankfully you are more sophisticated than most customers because you understand these things, the way you operate. But as a customer, when you woke up and heard the press conference that the Bank of Ghana did, laying out the 23 banks who had met a minimum requirement, the 16 that actually met, the others that merged, the others that they had to withdraw their license, the others that the Ghana Amalgamated Trust Limited will have to take care of. What did that do for your confidence in the sector, in a bank in which you have your money?
Without saying more than is necessary, my banker was not affected
by
all of this. So
okay.
that's just an aside.
Yeah.
If anybody has been listening closely over the years, as far back as when Emisa Arthur was governor of the bank, I was going on about and at them, at the government then, the Bank of Ghana then, that we have too many banks in this country. Okay, we have far too many banks, and my analysis was based on very, very simple lines. You don't have enough funds and deposits coming into the system, and you got all these plethora of banks sitting out there trying to attract people's deposits, yet the banks are not paying people a sufficient enough interest on their savings and their loans that they're depositing. So you have too many banks chasing just a handful of big cash holders. So MTN is a premier sought after client. SNIT is always being followed. Then you have a few of the oil companies and the commodity companies who are always being lobbied for funding by the banks. It then got to a point where government money has now become very, very competitive source of finding enough deposits to be able to manage the affairs. And I kept on saying, we need to rationalize this thing and cut down the number of banks that we have in order to be able to make it easier and better for people to go and borrow bigger sums of money. Rather, the opposite started happening, where we started rather issuing more licenses, allowing savings and loans companies to upgrade to universal licenses. And the more that went on, the more difficult it became. And you could see that it was getting to a crisis because banks were still bent on charging interest rates at the level at which they were then. And the interest rates still continued to be way too high. And irrespective of anything that the central bank was doing then, which was trying to use what they called moral persuasion to be able to bring down the lending rates by the banks, it wasn't happening. The rates were sticky going down, but were constantly going up with any small change. So it was clear that if the economy was to turn around, you needed to free up that space to enable people to be able to borrow money at a cheaper rate in order to be able to get profitable business. And that wasn't happening. So you were going to get to this crunch position at some point. Okay?
Something had to get.
Something had to happen in the banking sector. And the more the central bank procrastinated about taking that bold decision, which is what we are seeing now, we were left just scrambling for the peanuts of where we are. So everybody who needed money as a business person was borrowing from multiple sources. So they would try as hard as possible to get as much borrowing as they could from 3, 4, maybe 5 sources if they could, in order just to be able to carry on business. Eventually, the high interest rates was crippling businesses because they couldn't afford to pay back. So you were going to start seeing the businesses falling apart, all right? Because at the end of the day, it will catch up with you at some point. You might be able to borrow from Peter and pay Barclays, and then go and borrow from EcoBank to pay Standard Chartered. But you can do that only for as long as it takes before the cash catches up with you. So it was bound to happen. So I wasn't surprised. And I had been talking to some people and saying, is anything going to be done? Are we going to actually see some kind of a cleanup of the banking sector at some point? Because you can't have these small, petty banks lending out 200, 300 CDs and thinking that they're running a business. It can't hold water because the amount of income that they are making is not enough to take care of the overheads that they are carrying. So there was something going to happen at some point. So for me, waking up to hear the announcement that, UT, Capital Bank, etc., had been taken over, I wasn't surprised. And I'm still not convinced that it's finished. This thing is not over.
The Bank of Ghana says it's done.
It cannot be done. There have to be
the minimum requirement deadline had the bank met
it will catch up. It will catch up with all of those who don't have a strong enough customer base.
Okay.
All right. You might have been able to.
The chaff from the weed already. I mean, those who couldn't meet better, like GM Bank, if downgraded to become.
Once you get to the point where we are, now you have 400 million CDs. Let's assume that you started from scratch.
Yeah.
You got 400 million CDs, and you have to lend that money out in order to be able to get a return on the investment for shareholders to at least get something back. If you don't have 50,000 customers, say, for example, if you don't have 50,000 customers, who are you going to lend the money to? You need to have it's like this a television station. In order for you to be able to carry on, you need to keep on selling digital boxes, or you need to be able to keep on delivering digital boxes, because that's the only way you're going to get your revenue coming in. And if you don't have enough digital boxes out there, if you don't have 1 million out there or 2 million out there, you don't have sufficient enough revenue to be able to manage the operating cost of the business. And it's the same thing with the bank. Once you have the cash sitting there and you don't lend it out, you have no source of income. And if you don't, even if you lend it out and you can only lend out to 50,000 people, but you need to have 500,000 people borrowing money from you in order to survive, your bank will not survive.
That is an interesting point. I'll bring in another switch on. But so when you talk about the 400 million, I always imagine, so at the Bank of Ghana, there's a vault in which Fidelity Bank has an account, in which Fidelity Bank has paid 400 million that is sitting there at the Bank of Ghana. That, like my bank account, I can go in there and, issue a check and things. Is that what it is?
No.
But that is what I imagine. No, minimum. I thought Fidelity went to look for money,
it's like,
and then increase it.
It's like when somebody says the internet was like a pipeline. That's exactly what you say.
So that's not what it is.
No.
The 400 million that they've met, that the Bank of Ghana said they've met. Well, what is it? Where is the money?
The money is with the bank.
Which bank?
The actual bank.
Oh, Fidelity Bank, for example. I'm using it as an example.
As an example,
Has it?
They have the 400 million.
Sitting where?
Yeah.
Is it some
sitting with them?
Vault?
Well, there will be places to keep them, and I think those ones you keep
so it's not with the Bank of Ghana?
There is some fraction which is there, but what it is that previously some of the banks had only 60 million, some had 120 million, and now all the 23 that are left out of the 36 that we started with. You said 30. No, we started
36.
with 36.
36. Then it came down to
34. Then from 34 to 30. And then from 30, we are now at 23. Yeah. So they all have this money available to them. Where they keep it is not the point.
Let me ask on that.
They've got access.
Forgive me, I need to ask this question because I don't understand what you guys are talking. I need to break it down. So this 400 million, is it fiscal cash only or assets as well?
No, there is physical cash.
Okay, so like cash that I can count.
Yes. Physical cash.
400 million of that. That's
million.
80-something million dollars.
Yeah, that's right.
Why do they need that?
They need that because what is banking? Banking is simply defined as taking deposit and giving out loans, right? And the security for the taking of the deposit from customers is that you also have some capital that if things go wrong, they will be able to have access to.
Okay.
And
so I
so
see something in the saying.
Yeah.
So in other words, you need to have something before you take. So you are promising I'll give you money. I'll give you a loan.
Yeah.
Meanwhile, you don't have anything. So that's the whole concept behind it.
So they've got the money, and you were asking Sydney, what assurance is there if I have something in the bank? Now you are assured that that bank is on a very strong footing in that it doesn't have only 60 million or 120 million, but it has 400 million. So if they give out loans and naturally some go bad, at least they've got something to show up. Whereas in the past, if it happened, they can also undertake big ticket jobs. Before, the days gone by, Ghana was not an oil economy. We were just exporting minerals and timber. Now we are exporting oil. So as an oil economy, we have expanded the base of the economy and is ready to grow. But to grow, at the heart of every economy is the financial system, and in this case, the banking system. It plays about more than 50% of the financial system. So therefore, this money that they now have is going to help them to deploy to profitable ventures to be able to, grow the economy. Now, if somebody was in agriculture and they wanted to set up an industrial agriculture which needed like 200 million, a project, and the bank only had 60 million, it would have meant that they couldn't do it, and they will have to get other banks. Even a very typical example is cocoa buying. Every year, Cocoa Board has to go overseas to syndicate. So even this 400 million, if you translate it into dollars, all the 23 banks times 400 is 9.2 billion, which is just under $2 billion.
For all the, okay,
yeah,
okay.
yeah.
So the banks in Ghana
times,
are capitalized totally to the tune of.
That's right, 9.2 billion.
That's a lot of dollars.
Yeah, yeah.
Or cedis.
No, cedis.
Okay.
So if you convert to dollars, that's about $2 billion.
That's a lot of money.
Now, the Cocoa Board, they borrow more than that at the moment.
Absolutely.
So therefore, even if you put all the banks together, assuming they had only the 50 million, the 400 million, they only then some of them do have 2 or 3 times as much. You know. So
another thing that is important, and one of the things I want to do with the show is see how this benefits the customer going forward.
Yeah.
Because we've heard the Bank of Ghana, why we need to do this, if explained. But in terms of how this affects my mother in the village who saves, we haven't really explained it. So what you're saying is that the cocoa farmer, because I'm assuming if the cocoa board can get the money locally, it probably will be cheaper.
Yeah.
Is that a safe assumption?
It will be, yes. It will be.
So if it's cheaper, then they possibly can even raise how much they pay the cocoa farmer in Ghana. Because doesn't follow?
No,
not
necessarily.
Okay.
Not necessarily.
But let me ask another basic question.
Yeah, okay.
Let me ask another basic question. So for me as a banking customer, does it mean that now that my bank has more money, when I apply for a loan, I'm going to struggle?
No.
Is that going to be a problem?
No, it's not. You are not going to struggle
To get a loan.
That's right.
That's it. And the biggest thing, I think you mentioned it, is the interest rate that I pay.
Yeah.
Because that's the big problem. Does it mean that this somehow will have an impact on that problem?
Not directly, but indirectly, in the sense that the interest rate, simply defined, is the cost for the use of money.
Okay.
The cost for the use of money. Okay. So either you are using somebody's money, and therefore you pay interest for using that person's money, or somebody uses your money, and therefore they pay you interest for using your money. Okay. If you put a deposit in a bank, the bank is effectively using your money, so they will have to pay you interest for using your money.
Yeah.
If you borrow from the bank, you are using the bank's money, so you have to pay interest for using.
Okay.
Now, interest rate, as you know, is set with the macroeconomic conditions as the underlying factor.
Okay.
And we know that in the recent past, the benchmark, which is the MPC, Monetary Policy Committee rate that they set, has been coming down, and from over 20% to now 16%.
And he said that we haven't seen a commensurate drop in.
No, normally the transmission rate is slower when it's coming down, but when it's going up, the rate is faster. Simply because the underlying cost, the fixed cost over a time, if for instance part of the fixed cost is the rent, if it comes down, you cannot easily go to your landlord and say, interest rate has come down, so reduce my rent, for me. So for some time to come, that rent will still be there as a fixed cost in the short to medium term. But really, since it started coming down, interest rates have also been coming down.
It has. That's
true. It's not as it used to be.
As fast as we wanted,
exactly,
but it's come down nonetheless.
That's why I said the transmission rate is a little bit slower. So by and by, the average consumer or customer of the bank is going to benefit.
Okay.
The bank that you are going to deal with has a bigger pocket.
Okay.
And therefore, if you come up with a big project, they'll be able to assist you. Right? And then, secondly, with so much money about, we're now going to see a situation where banks will be knocking at people's doors.
We used to have that, Kingsley. I recall 10 years ago, the first time I took a loan, the bank kept knocking. I think 2 banks came. One came, I said, I'm afraid of loan. The other one came, offered juicy things. They brought me this nice relationship manager, woman, nice girl, came to offer me. I went out and I took the loan. But then that changed. To the point where I am looking for a loan, I am struggling to get a loan. In fact, one time I had spent 6 months looking for a tiny amount of loan. What I'm hearing is what has happened right now will bring back those days. Is that your assessment of it too?
Yes.
Okay.
It has to happen. There are 2 things at play. One, there's a lot more cash available.
Okay.
Maybe 3 things. 2, there's the expectation from shareholders that they will get more return because now they've locked in
Yeah.
a significant amount of their capital.
Okay.
In simple economic terms, it's an opportunity cost issue.
Okay.
If I'm not getting the money from here, I have to get it from somewhere else. So if there's an opportunity for me to invest in something else and get more money, why am I going to come and leave the money sitting in your bank when I can't get the opportunity to make my money? So that is going to come into play. Then the next thing you have to also look at, competition is a very, very good thing.
Okay.
All right? Everybody wants to get in there before their competitor.
Yeah.
So there's going to be a lot of strategizing of how do we bring in as many customers as possible. Like I was trying to explain a little earlier.
Yeah.
You need that base. You need the numbers to be able to make this work. If you are charging 10%, for example, to make it very simple, 10%, and you have 500,000 people paying you that 10%, you're going to make a significant amount of money.
Yeah.
But if the 500,000 goes to 5 million, it's a different ball game.
Yeah.
So the ones who can quickly get out there and muster as many customers as possible is the ones who will achieve.
Yeah.
And the more customers you have, the more varied borrowing there is in the marketplace. Then I use an example. If you're a farmer and you need to borrow more money, you need to get money to be able to buy tractors, caterpillars, etc., etc., etc. Somebody also wants to have enough money to be able to plow the land.
Yeah.
And if the tractors that are available are insufficient, then of course people are going to rush to the bank, see if they can get there first, get the tractors so they can have those tractors out.
Yeah.
So the competition kicks in, all right? But everything depends on how well the economy is managed.
Okay.
Okay?
So this will think you're done if we fail to fix the macro economy.
You have to fix the economy.
Okay.
Forget about whether it is macro or micro or fiscal or whatever. You just forget about all that terminology.
Yeah.
The economy has to work.
Okay.
At the times when banks were knocking on your doors asking you whether you wanted to borrow money, they were doing so because the economy looked good.
Okay.
And it looked like as if it was going to have an impact going forward and wealth will be created. So the banks were happy to go and lend that money out and knowing that the risk was not that great.
Okay.
The minute the economy turned around and it started sliding down, the banks then shrunk back. All right?
The risk is too high.
Yes, the risk is too high. If I go and give money to somebody who's a second-hand car dealer and he brings in 100 cars and then nobody buys the cars, how is he going to pay me back?
Okay.
You see?
And that has a ripple effect
And
on
that
the
has a
interest
ripple
rates.
effect. Absolutely. Yes. Okay. So the more risk that the banks take, the more interest. In fact, if we get very technical, there is a formula that will calculate how the interest rates are made, depending on different types of risk. Believe you me, one of the things that banks always said, we don't know where to find people. Somebody comes and borrows money from the bank.
Yeah.
We don't have an address.
I took a loan recently. This is just a few months ago, and I was also drawing directions to my house for them.
Yeah.
This is just literally four months ago, and I was also drawing. You know, you go to this, you meet the cuckoo seller.
And that's one of the problems that we are facing now. That even though the technology is now available, banks are still not leveraging that technology in order to be able to bring the costs down.
Yeah.
Because if he's complaining that he can't find you, all right. Right now, he can find you because he has a GPS locator address.
Let me tell you something. When I was doing that, I was telling my banker, but I have the
GPS.
He says, "Oh, we don't use it. We don't use it." I said, "Why?" I said, "No, we don't use it. We don't." I said, so yeah,
and that's one of the reasons. And that's one of the reasons why I'm telling you that a few of the banks are going to collapse again.
Okay.
And they're going to have to they're going to be forced to merge, because the banks who have been left behind, who have not exploited technology, those banks who have not created apps for their customers so that people can transact business without necessarily going to a brick and mortar bank site to be able to do things, are going to start losing out.
True.
Because at the end of the day, when you are able to pay people money, either through mobile money or direct through bank transfers or rapid, whatever it is that you're doing, and you can do it sitting behind your television set, you will do most of your transactions that way.
Absolutely.
You're not going to go around walking in the heat of the sun,
Absolutely.
going up and down, trying to cash a check at a bank when you can pay somebody directly like
Absolutely,
that.
absolutely.
And technology is going to become a game changer. As we go forward, those who can't apply mobile money, all right, and electronic money payments are going to have to either invest in that side quickly, and they're already late because others have done it ahead of them, and they're going to get into a pickle.
Fantastic point. So we now explored what this means for you, and I think for me it's at the heart of this conversation. But there are big questions that still remain, and I think Kingsley Hayford just touched on what needs to happen and what might happen. Mr. Twahene, so we've had a Bank of Ghana saying, sorry, forgive me. No, to each other. Your good friend Twahene has been on the show many times. Yeah. So, but the Bank of Ghana has said, and I think it's a point that Kingsley Hayford touched on, that we are at the end of the process. It's done. Yeah. But he says, not done actually. I mean, in the sense that the Bank of Ghana portrays it, because many of the banks, now that they have the capital, will actually see their smoothness level in terms of how to spend the excess capital they have to make the returns to stay in the game. Okay.
Now, one of the reasons why they said we are at the end of the process is regulation is being tightened. It's always been there, but there was a bit of a laxing. They call it regulatory forbearance. Now they're not going to allow that anymore. Secondly, they brought a new system called Capital Requirement Directive, which is going to keep in check the relationship between your capital and the risk that the capital faces. And they started piloting that from 1st of July, and then 2018, and 1st of January 2019 is in full swing. That all the 23 banks have to do this. This is following the system we call ICAP, which is that your regulatory capital has to have a relationship with your economic capital. You see, the 400 million you said is your regulatory capital. That's one size fits all. So any bank in the 23 bracket, whether you are big, medium, or small, you have to have that 400 million. However, your economic activity may not be the same. Uniformly, each of them will have a different level of economic activity. If we are allowed to use some banks, you can say Stanchart or Barclays, their activity will be very different. And in the past, it was different from, say, Baroda, which has now exited. So
has been consumed by, I think, Stanbic.
No, they left, and then they gave their customers to Stanbic. Because they said the economic model didn't fit. So therefore, with this new Capital Requirement Directive, you are able to set your capital according to the economic activity that you are undertaking. And that economic activity has a relationship with the risk that each time you use your capital, the risk that it's associated with. So therefore, if the regulator, is saying they are now awake as opposed to being asleep, sleeping on the job previously, and that they are going to ensure that, for instance, this device that they have brought will be kept to the letter, then they, even if there's going to be a bank failure, the telltale signs will be there. Because this allows them to come up with what you call an enhanced capital adequacy ratio. And so they'll be able to tell in advance if a bank is sliding, and corrective action will have to be taken before it happens that like it did in the past. So I'm confident that if these things are in place, then yes, naturally, nobody can foretell the future that there can never be a bank collapse. But the telltale signs will guide us to see whether this bank is keeping to the straight line or they are not keeping to the straight line.
Yes, please.
But let me just add, and maybe you can also comment on this or criticize it. You see, what we are seeing is the rationalization of the tier one banking, the top echelon within the banking sector. These are the big universal banks, which, if the Bank of Ghana says we have now come to the end of that exercise, I will interpret that as meaning we have now come to the bottom of the tier one banks, the big banks. Yeah. You've got the savings and loans banks.
In fact, today, LC announced that now that they're done with the banks, they're switching the attention to that.
Yes.
To savings and loans now.
And that's an even bigger mess.
Well, but then that is relatively small. We normally use what you call the 80-20 rule, in the sense that there are 5 strata in the banking sector. You got the universal banking, you got the savings and loans, stroke finance houses, you got
microfinance,
rural community banks, microfinance, right?
Then you've got your money lending.
No, those are not deposit taking.
So
they are not deposit taking.
Okay.
Now, these 4 account for about 20% of the entire system.
Okay.
And this UB account for about 80%.
Okay.
So the biggest chunk has been resolved.
Okay.
Now they're going to gradually look at the savings and loans, finance houses, the rural bank, and the microfinance. But they are smaller problems to resolve than the big one. Okay. So yes, as far back as October, governor gave notice that they are going to resolve.
May I suggest, however, that although it will be 20%, they might have more individual customers, because who can be 100 cedi there, 200 cedi there, because our economy is like that. I get you. I get you. But if something happens to them, you have more people crying at your door with their 100 cedi, 200 cedi, 300 cedi.
No, but if you are able to resolve
the big ones, this one, no matter how many they are, the money involved is small.
Well, but you see, but this is exactly where I was heading.
Yeah.
That you might not have the volume, cash, the values there, but the number of savers, all right, depositors in there, it has a bigger impact when some of them lose 300 CDs.
Yeah. For them, it's a big deal.
It's a very, very big deal.
Yeah.
Look at GN Bank, for example.
Yeah.
GN Bank has got one of the largest branch networks in the country. Okay, their reach is extensive. At one point, they were boasting that they had about 300 or 400 branches.
Go to village, you see a GN Bank there. That's actually a surprise.
So when you cut back a GN Bank like that, assuming that it is unable to manage and maintain those 400 branches because the overheads are too high, and it starts cutting back on that, now you're depriving those community depositors of the access to the banking sector. And we've been crying for a long time that one of the problems we have is we don't have enough access by the rural and underserved communities.
They will all be catered for.
It has to be, yes, and it has to be catered for. All right? So the question now is, do we now change the paradigm of the way we are working so that the universal banks are going to be able to have a better system of reaching that customer base? My theory is that we are getting to a point where, because of mobility, financial mobility, the tendency now is for people to be doing more electronic financing and banking than they are going to be doing with the physical location. All right? So if banks really get going, they will start offering services through their apps.
Yeah.
I should be able to pick up my app, make an application for a facility, short-term overdraft, 6,000, 10,000 CDs, and get that approval granted right there and then over my
I can access through my app.
Yeah.
Absolutely.
So you don't need the brick and mortar in order to get it going. And that for us will be refreshing, because again, what is going to happen is that we don't therefore need all these debit cards and the Visa cards and all of these, which are high fee charging products. Okay? If we can skip all of that, leapfrog all of that, and go straight into e-banking, we are far better off.
I'm going to take a short break. When I return, I'll get Nana to comment on that. And then we'll examine some of the big items, controversial items in the recent announcement that we heard from the Bank of Ghana, particularly the establishment of the Ghana Amalgamated Trust Limited, which is becoming for some scrutiny with the private pensions. Who are these private pensions, by the way? And the GM Bank scenario that we've heard, that Case Level touched on, will their downgrading solve the problems that we know they had as a bank, and how will that be dealt with? Also, we've known today that Heritage Bank, in particular, is fighting back. Their licenses have been withdrawn and they've been added to the consolidated bank. They are questioning, in fact, challenging the Bank of Ghana decision. We interrogate whether they have a case. The Bank of Ghana says they don't. And then maybe we end with what has happened today with Men's Gold. Bank of Ghana spoke today on it. Bank of Ghana says, in essence, that they are, if you're a Men's Gold customer and you're complaining, you are on your own because we warned you and you took that risk yourself. In fact, you dealt with Men's Gold at your own risk. We'll end with that because there's been a demonstration today. Some of them have been arrested. They're still in the process of being charged. And then tomorrow, we understand from the police, they'll arraign them before court. Stay with us. When we return, we'll explain some of these details also. So live here on PM Express. We're trying to break this down for you. And I know millions of you watch us out of Accra, where sometimes we think everything happens to be in Accra. But those of you who save with these banks in the rural areas, and you're watching us tonight, we're trying to, and like myself, I didn't understand all these. Until I've been listening to these brilliant minds, for example, explaining to me that the 400 million is not sitting somewhere, it's sitting in the bank, it's there, it's not at the Bank of Ghana where there's an account, that you can go
it's in a vault.
So that is good to know that the money is there at my local bank, that anytime I need it, I can fall on it. Possibly I'm going to have easy access. Banks will be chasing me again with loans. Hopefully, as they chase me with loans, hopefully the rates indirectly might come down, as we've explained. If you need big money as well, like you are in farming, you have hectares and hectares of plots, and you want to get into tractor, you need millions. And the banks now have more money to give you, so you can. So that is good to know. But having said all that, let me come back to you, a champion on this one, and this is important because all this reform that we've been through the last 2 years hit our confidence, especially with indigenous banks. I must confess, I'm one of those who went to my indigenous bank, took my money and took it to a foreign bank because I was just not sure in the wake of all the collapse. Now that the Bank of Ghana says this reform, the shake-up, is done, what should the Bank of Ghana's next strategy be in deliberately restoring my confidence and millions of others Ghanaian confidence in our indigenous local banks? Or should they just end it and say we've done it?
No,
we've moved on?
No. The Bank of Ghana is there as a regulator to protect the depositor. Banking is a very regulated industry because typically the capital of the bank is made up of a fraction of the owner's own capital, and the rest is other people's money. If, for instance, the last survey Bank of Ghana did of the capital structure, you see that 17% is the owner's capital, 83% is other people's money. And therefore, so they have to take an interest imposed on them by government to ensure that the depositor's interest is protected. So now that the resolution of the issue has come to an end, and we know that 23 banks are now well capitalized in the system. That's stage one of the restoration of confidence. The stage two is the additional act that has already been passed, but it will be operationalized either by the end of the second quarter or the beginning of the third quarter. This is this Ghana Deposit Insurance Scheme, where depositors will now have some level of insurance. And it's not for the big depositors. This is the small and vulnerable depositors. And they've divided the 5 subsectors into 2. One called Fund A and Fund B. Fund A are all the universal banks, now 23 of them. And Fund B are the others, that is Savings and Loans, Finance House, rural banks and microfinance. If you are a depositor with Fund A and God forbid it goes down, you'll be protected to at the level of 6,250 with the money that you had there. Now, if you had 10,000, yes, you get the 6,250 immediately. The balance of 3,000 odd, you have to claim in liquidation. So it doesn't mean you've lost it. If you are with any of the other four, then you get immediately 1,250, and then any balance you claim in liquidation. So that is another assurance that, yes, if I leave my money with any of these institutions that is regulated, and the operative word is regulated, because you mentioned that very soon you are going to introduce men's gold, which was an unregulated institution. Then if something goes wrong, there's a protection that the law allows Bank of Ghana to come to your aid. So that is also another way of restoring confidence that now your money that you moved away from the local bank to a foreign bank, if you had left it there, it would have been in safe hands, because I'm sure your money wouldn't have been more than 6,000. So therefore, you would have gone.
Casey, that same confidence question, isn't that the next big step, and possibly even the more difficult part of this?
Well, yes, the final responsibility lies with the central bank. Central bank's mandate, if you look at it, the way it's set up and what it's supposed to do, one of the key important things is to ensure that there is economic growth and economic advancement. So they have that responsibility. But the main confidence developer is always rests with the business itself.
Okay.
If here, Joy Multimedia, in order to get people to continue listening and buying advertising space, you have to put out credible information. You must be seen to be the ones who are giving the right stories all the time. The minute that starts crumbling, it starts going wrong. You cannot expect the Ghana Independent Broadcasters Association to create confidence in your business. It is your business. You will start creating the confidence. And the more the banks do that, the more reliable they get with all of this, the more confidence will come into the system as we go forward. One thing that we cannot afford to have is another banking collapse. We can't afford that. We've done it once before. For those of you who are not old enough, you would remember the Non-Performing Asset Recovery Trust. It was a major problem that we had, and a lot of the banks were packaged and floated on the stock market in order to be able to at least get some kind of confidence back in. It has restored that to some extent. This one is should I say, I really should say it's self-inflicted, and it's self-inflicted because the regulator did not live up to scratch. I think that's the main reason why we are where we are. Had the regulator lived up to scratch and collapsed these banks long ago, before we arrived at this point, had the regulator been a little bit more vigilant and looked more at the corruptible influences within the central bank system, we wouldn't have arrived here. A lot of the time, you see, you cannot accept that and admit that somebody used fraudulent means to capitalize the setting up of a bank and to get a license. It's a no-no. You are admitting
that
failure.
Failed,
all right? And if the regulator was a little bit more on top of it, we wouldn't be there. So for as long as we keep doing that, and the perception is eliminated that the whole banking sector is corrupt, we will get there very, very fast.
A very quick question on this Ghana Amalgamated Trust, Ghana Amalgamated Trust Limited, which is essentially private pension funds in Ghana, injecting funds to help 5 banks. Agricultural Development Bank is one of them, NIB is one of them. Is that a good idea? I've had criticism on it. Very briefly on this. What's your position on this?
I think it's a very good idea. Yes.
But the private guys, should we know them?
Well, I'm sure if you approach them, you will know them.
The Bank of Ghana should be telling us.
No, because the Bank of Ghana didn't form them.
The finance ministry should.
Whoever formed them, they are not faceless. They are there. So if you approach them as journalists, you have that power to ask for information before the passage.
But you
of
think
the
it's a
RTI,
fundamentally good idea to this?
It's a very, very good idea because, you see, they, at some point when this capitalization came up, the indigenous banks formed themselves into some informal association, and they approached the president and said, you know, like
We need
it
to be
was done
protected.
previously, do it 2 stages. That let the foreign banks, you know, do that immediately, but give us up to 4 years to
For the
do
minimum
it.
capital,
No, yes, right. And they just explained that it couldn't be done, you know. So therefore, a committee was formed by the president, and one of their recommendations was that if they need help, you know, it should help them. So that is where it came from. And from that on,
so this was
the governor
recommendation.
Governor kept repeating MPC meeting after MPC meeting that those who are well managed, they will be assisted. And the 5 that were picked, 2 were government-owned banks.
NIB,
the shareholders,
NIB,
that's right. So that one, the shareholder, there's only one shareholder, and that's the government. So they didn't have any choice whether poorly managed or well managed. They had to fund it, you know. And so the other 3, the criteria they used were that they were solvent, they were properly run,
but they just couldn't raise the money.
They couldn't raise the money, and this is coming in as equity, you know. And I don't know
these guys will end up becoming majority shareholders.
No, they are shareholders. If you take, for instance, the Omni Sahel triangle. Now you got 3 shareholders, each with 30%. You know, so therefore they are in there as shareholders. I don't know what the others are, but very soon we will get to know.
Kesley, your verdict on this, very briefly, on this arrangement with the pension.
On the amalgamated bank? Oh, you will get to know. Because
but is it a good idea?
Well, for the same reason why you need to kickstart anything to get it going, it is always a good idea. So the carburetor has to be clean, the petrol has to be good, the filters have to be working, and the starter should start.
I need to ask you this before.
Call it quantitative easy.
Okay.
Yeah.
Except that you're not printing money.
No, call it whatever you want to call it.
Men's goal.
Yes.
Any sympathy for them?
Not one iota of sympathy from you whatsoever.
Okay, I know you say, but that's what I wanted to hear from you on this. But thank you all for staying with us. I hope this has helped. Join us again tomorrow on another edition of PMS. My name is Evans. Enjoy the rest of the evening.